How's this market look and feel to you right now?
Feels a little choppy. It feels like we're looking for a catalyst. There's no real catalyst out there. And I think this chop lasts until we have earnings season because there's really nothing to hang your hat on.
That long?
Bonds are up, yields are up one day. Yeah, I think so. I mean, anything can change on a dime, obviously, but I don't see a ton of catalysts out there. What we need is earnings to get things higher. Until we have another earnings report or earnings cycle, you're not really going to get a good feel for the power of the earnings cycle. And so I think we have to wait until the summertime, probably second week of July, before we start making substantial headwind.
Wow.
Substantial upside.
So Fed meetings are and data is somewhat irrelevant?
Yeah, I don't think the Fed's going to tell you anything that you don't know at this point in time. Fed's going to say, hey, we're following the data. We can follow the data too. The data's okay. The economy looks like maybe it's not as strong as people expect. It looks like people are getting very nervous about the consumer. And inflation looks like it's tame is not the right word, but it's not hot at this point in time. So what is the Fed going to tell you that you don't already know?
Okay.
I don't see that as a catalyst. I just see that we have to digest more of the information. We have to get to earnings season, and then we can start making some more substantial moves.
You do have a big call, though, about some moves that you think viewers should make. Last time, you liked some of the reflation trades, right? And energy, industrials, and things like that. Now it's time to fade those? Or what? Talk to me.
So what we liked, and maybe there's a misquote here, what we liked is we think the industrial space is a great place for stock picking. You have a lot of companies that are AI adjacent. You have a lot of companies that are tied to the super cycle. But for the most part, we haven't liked the reinflation trade. It's a trade that we want to fade and is beginning to fade, and we think it will continue to fade.
Oh, I got you. Okay, so then what's going to work?
Okay. So what's going to work is we're really boring. We've been talking about this for the last year and a half. It's a barbell with something GARPy, something growthy. That's the communication space, right? And we want to barbell that with something more defensive. That's healthcare, that's utilities, in a 60-30-10 type allocation. And that's worked out very, very well year to date and for the last year and a half.
What about tech, which is, back awake?
You've got some tech with communication. We just like the valuation in the communication space. We like the technicals in the communication space. And if you look at the fundamentals continue to power higher. Tech is really just a couple names, and if you look, what's driving tech year to date, it's NVIDIA, and most everything else is a secondary or tertiary trade. So I can't get behind tech right now. We're neutral on the space. We think that software is a little bit better than hardware, but we don't have real strong conviction with tech at this juncture.
We're looking at utilities, and I think there's a debate in the market as to why they had the move that they did recently. Obviously, over a longer period of time, they haven't had nearly as great a move relative to the equal weight S&P 500. Right. So just saying the move, I guess, isn't the most accurate. The recent move that we've seen those stocks really go off to the races to some degree. Does that continue? Yep. Should it?
I think it does continue. It'll be a little bit of a bumpy ride. We upgraded the space at the end of the year. It was really washed out. It was oversold. We thought it could work for multiple reasons. We thought if rates go down, it works. We thought that just you could get an oversold bounce. We didn't really appreciate the issue around the electrification or the power trade. That has been moving it. A lot of people are asking us, hey, if you look at utilities, they've really outperformed year to date. Do you want to take profits? We don't want to take profits at this point in time. We think the valuation is still compelling. We think the opportunity set is still compelling. And we think that the technical picture is still very positive.